Jeff Peterson from Heartland Farm Partners is our corn and soybean market analyst this week. The futures price for March soybeans closed January at $10.25 per bushel. After operating in a 50-cent range in February, the contract finished the month at $10.25 per bushel. March corn, meanwhile, rallied 7 cents on Tuesday, its biggest move in 4 weeks, and followed the performance by adding 9 cents Wednesday. The active movement earlier in the week could have been impacted by reported changes to the point of obligation in the renewable fuel standard. We talked with Jeff Thursday morning and started by asking why that was so important to ethanol and biodiesel, and therefore corn and soybean markets.
You know, I think there was really 3 points, Jeff. One, the market was in the right place. The market had pulled back and we were looking for a bounce and looking for some news. But then on top of that, there was really kind of 2 main pieces to it. The first of all, as soon as everybody heard E15, I think everybody started thinking, oh, we're going to produce a bunch more ethanol. And we both know that that isn't the case. Really what they were just talking about is giving us a summer waiver, which would open up some more potential sales on the E15 side. We've heard that if that did go through, could mean a couple 100 million more bushels of corn used, so will completely change the market? No. The other side of it came from the bean oil side, and that was the talk about getting this producer credit, tax credit back in place for those biodiesel producers. And that really gave the soybean oil a bounce because it looked at that and said, well, you know what, we're going to take away a little bit of demand there from Argentina and also from Canada. So those 3 things came together and gave us a nice bounce, and it was good to see that we could do that.
Last week, the USDA projected acres for 2017, 90 million in corn, and then scaling way up in soybeans to 88. What are your thoughts on that?
Yeah, that's interesting. So we brought corn down about 4 million acres from last year. What was interesting, that was about 1 million less than what the trade was actually expecting. We think there will be a reduction on the corn, but our research would probably say not quite that strong. We think if there could be a surprise, actually, maybe corn won't be quite as low. It will still be down, maybe down, about 3 million acres. Over on the bean side, that's actually up 4.6 million. The other thing was that was 420,000 acres above what the trade was expecting. So that put a little pressure on the market. We could actually buy that number on beans, but like I said, if there would be a surprise, it probably could be that we see maybe a few less beans and maybe a little bit more corn. Overall, the thing the market's kind of questioning is that when you bring corn, beans, and wheat together, that's about 224 million. That's down 3.6 million acres from last year planted. So everybody's kind of questioning where those acres are going. So we'll have to see as time goes forward.
The agency next week will release its supply and demand numbers. Do you expect any major changes?
I think there is a couple changes that are probably coming. I think we could see Argentina maybe bumped a little bit. It seems like the production down there maybe isn't quite as bad as it was, but for sure we'll see some increasing coming out of Brazil. They're making good progress on their harvest. If you take a look at Mato Grosso, they're about 66% harvested. And on the small side down there, you've got Rio Grande do Sul, about 13%. Right behind those combines are the planters. That safrinha crop in Mato Grosso is about 79% planted. So they're making some good progress down there.
If you look at the potential for summer, we talked about this last week on the show, the potential for El Nino is something you're also starting to watch. Why is it noteworthy? Yeah,
it's noteworthy for a few reasons. First of all, it's that time of year, Jeff. We're getting to know more about it, what's going on out there. There's more known on the acre side, so naturally it's closer and it's time to spend more time talking about what's the weather going to do. El Nino for really most of the major producing areas in the U.S. would actually be pretty positive, but it still could give us some surprises. Surprises in Australia, also some surprises in Northeast China. So that's why we're looking at that right now, just to make sure there isn't going to be any major surprises out there that we aren't anticipating.
We're through February in the price discovery period, $3.96 for corn, $10.19 for soybeans. How do you think producers can use this in their marketing plans?
Yeah, it's that perfect time of the year to really get those marketing plans out, get them all in place, go through, work up their break-even numbers, know where they're at. And I would say for most guys, when they look at the crop insurance revenue protection that they've got, you know what, that's not going to cover all their costs. So that means they're going to need to make some additional sales to protect themselves. We say take a look at your APH, take it time your insured amount of bushels, identify that as a level that you're willing to get sold up to, prior to harvest time if we see the prices that we like. That's how we're wanting to use those numbers.
Update me on your sold positions.
Yeah, right now we're coming in, and it's going to seem a little interesting when I say this, Jeff, is that we're getting fairly heavily sold on old crop beans just because we think this bounce that the market's given us has been kind of a gift. We've only got about 10% left. New crop wise, we've got about 40% sold right now of new crop. On the corn side, we've only got 10% sold on new crop. We think there's going to be some better prices down the road yet. We think there'll be some weather items and some issues with acres. And we've got about 30% left on the old crop side. The best advice I'd say right now is, you know what, let's be a seller on some bounces. Let's continue to sell these. We know this is the time of year that the market's going to give us some opportunities to get some good sales on the books.
This was a selling opportunity this week for beans and corn, then, you think?
I think it is. I think we want to continue to look at that. I think on the bean side, if you can get beans up just, you know, in the 10, 15 cents from there, go ahead and make some more incremental sales. I think what we'll be doing here is, even though we don't have all of our new crop beans sold yet, we'll be coming back in and buying some puts back against those unsold bushels, because the other factor we have to think about right now, we don't know what can happen from the policy side. And could there be some unintentional consequences that happens with some of our major trading partners? So I'd say overall that gets us in a position where we just don't want to quite take as much risk this year as we would in probably other years.